Welcome to the Forex Weekly webinar. I'm Mike Swanson, founder of TradeWest Forex, and today I'm going to be teaching you guys about tick-based charts. What are they? Why should you be using them? And the reason I'm showing you this is we just actually got this embedded into our own trading platform, and I'll be showing you all about that today as well. So let's go ahead and talk about it. What is a tick chart? Some of you have probably seen your normal one-tick charts, like a little ticker, but what I'm talking about is tick time frame, not time frame, but tick multi-tick charts. Okay, so instead of having each bar represent a certain number of of minutes or hours, a time-based chart, what you can actually have is a chart that's based on every movement of the market, every tick. So each time the market moves up or down, that counts as one tick. So what it will do is, instead of printing a bar every so many minutes or hours, like I say, it will print a bar after so many ticks or price movements. And let me tell you why that's important. Okay, why should you use tick charts? Why should you use those types of charts? Well, here's what they do. They actually filter flat markets very good. Because if you think about it, a bar is not going to print if it's just sitting there and not moving. So if there's no ticks and no price movement, no new bars show up, which makes it so you don't get those long flat periods with a whole bunch of candles like you would, say, on a 1-minute chart or even any of the other time frames when it's slow. And that also is going to allow you to see the trends more easily, and also the volatility. If things are really erratic, it's going to be easier to tell that on a tick-based time frame instead of having to switch down to, say, a 1-minute when you're on the 1 hour trying to figure this out. And it also allows you to detect breakouts more easily, right? Because instead of it creating a long channel, you're going to see these areas where the market came up really fast and then bounced back, came up, bounced back. And you can clearly see support and resistance and breakouts a lot more easily. So now here is a chart. So if kind of following again why you might want to spend some time watching tick-based charts is look at the difference of this chart. Okay, what you're seeing here is nice, smooth break. When the market takes off, you see a nice, smooth trend. Okay, if we were to look at this same chart in a time-based chart, time period, it wouldn't look like this, right? It wouldn't be from here to here. You would have it drawn out like something like this. And that's much more difficult to stay in that trend when you see things going down and up and down a lot. So when it just puts it into a simple tick chart like this, it's easier to see that you're still in a trend and hold on to a move. And it also helps you, again, see that support and resistance. Okay, so if we look right here, this area, the market pushed really hard with the momentum from the tick movement, you can see. And then it played around there for a little bit, bounced back hard, came up again, and spent a good amount of time trying to push through there, bouncing back and forth, creating a lot of tick volume. When there's a lot of volume and it's failing to break out, that's a good place to go short. It's also a good place to look for future breakouts. Okay? So that is why you should be looking at tick charts, and that's why we've spent time trying to get this embedded into our little trading platform on Informer. And let me bring that up here and kind of show you what they look like on the tool. Okay, so here's the Informer tool. You have your chart tab, and we just barely released this, so we don't have a ton of indicators and other features, but we have the basics to where you can use tick charts to see support and resistance and volatility like I've just shown you. Okay, so you can see here, I just started this one up on the pound based on a 3-tick chart just to get some data for you guys. Because when you first load it up, it's not going to have historical data. That's something we're looking to add in a future update, since we've got it based on your broker feed. So you just come up here, you select your broker, you select the pair, and then you select a number of ticks, or you can go in here to custom period and put in any number of ticks you want. It's just like time frames. The more ticks you have, the longer time frame pretty much kind of you're looking at, because the longer it takes for the bar to print. With this one, every time the price moves up or down 3 times, it moves to the next bar and it prints it. Okay, so you can see here the market was getting some volatility here. It was moving down. This bar had 3 ticks, went straight down, and then you had a lot of back and forth tick movement. And see, this would have been filtered by, say, a 10-tick chart. We wouldn't have seen any of that. We would have just seen one bar, if that makes sense. It would combine all of those 3 ticks. You know, we probably had to have like a 30-tick chart, but it would take all of those and put it into one bar. Okay, so if we were to look at this on another time frame, you know, it might look, or on another tick frame, it might look like this. It might have one bar down, another bar down, another bar up, about like that. So you'd get like 4 bars out of all that. But anyway, I just wanted you to see, we're getting some movement right now, and it's showing you there's volatility, where you know you wouldn't see that in a 1-minute chart. You'd still be here printing a 1-minute bar. Okay, I'm kind of jumping around a little bit, but there's really not a whole lot to the tick charts once you understand the basics. But like I say, they really help you see where the market's struggling to break out. They help you see when there's a lot of volatility that you might want to jump in and catch the move. And it helps you see when you should fade the moves. So hopefully you enjoyed this little training. You can download this tool and use the charts. But let me get you the links, and then we're going to go into the Q&A here. So we'll be posting this on the blog, tradewestforex.com/blog, and that's where you can also find all the other trainings. And you'll be able to download this tool that I just showed you with the tick charts, tradewestforex.com/informer if you don't have that already. So it's time now to go ahead and jump into the Q&A. So if you have any questions about tick charts, or you'd like to go over some more examples of how you could use them, whatever you have, type it in the chat box, and we'll go over those questions now. So here we go. We got a good question from Leslie. Says, how do these charts compare to the range bar based charts? Okay, a range bar is a little bit different. It's based on blocks of movements. So the market can sit there and move up and down all at once, but it will only print a bar after a certain amount of movement, say 10 pips. You could have a, let me go ahead and just draw an example of this for you. Okay, so you'll have these bars, these little boxes that are made up of a certain number of pips that you specify. This could be, you know, let's say it's a 10 pip based range bars or Renko bars. Okay, what will happen here is the market can sit inside this and go up and down. Okay, it can go up and down all at once. Kind of a poor drawing here, but it can sit there and go up and down all at once. But what it's looking for is from start to finish needs to be 10 pips before it'll create the next bar. And then again, this one will not print until, you know, you've gone up and down all you want until it moves up 10 pips in this case. So you're either going to get a bar that prints here, or you're going to get a bar that prints down here. It has to go up or down 10 pips, or whatever size period you're using for this. Does that make sense? So what these do, they're also really helpful because they help you see when it helps you actually filter volatility of, or you know, whipsaws, where the market just sits there and does tick back and forth a whole lot. It will get rid of those. So it'll just break it down to, let me see the actual movements in the market. And so these are different. It's something we'll probably integrate into Informer sometime in the near future, but you know, we want to get as many chart types on there as we can. But yeah, that's the difference. This is based on an amount of movement in pips, where tick charts are based on a number of movements to print a bar. Okay. Are the ticks actually the time frame? Yeah, let's go back to the chart here and I'll show you that. The way it's going to work is each time the price moves up or down, that counts as 1. Okay, so let's say your bar starts right here. You got your little tick. As you can see over here, we have all these little ticks leading up to it. Okay, right here, I'm just going to draw it on this chart. Right there is where it started. A second it went down, that counted as 1 tick. Maybe it went to right there. Okay, and then when it goes down again, that's 2 ticks. And then it finished right there at the bottom at 3 ticks. So there's 3 ticks, and then it moves on to the next bar because that's what I've got this set at. Okay, I've got this chart set at 3 ticks. So each time there's 3 price movements, a new bar forms. So yeah, instead of it being, okay, after every 1 minute, 15 minutes, a new bar shows up, it's different. It's much different than when it's based off of actual price movements. And we can sit here and watch this. I can see 2 already. It went up, it went down. As soon as it moves down or up again, a new bar will appear. There it goes. See, 1, 2, 3, next bar. Now, you're probably not going to use 3-tick charts. This is just for an example, unless you're, a scalper type trader. You might want to use a 100-tick chart and just kind of play around with those. But usually, it's going to be just like with your time frame charts. How much time do you want to spend watching the charts and watching ticks develop? Okay, now if you want to be a day trader, maybe you will use like a 10-tick chart or 3-tick chart to really get in there and see what's happening. See the volatility a little easier. But that's how it works. So let's see. Someone's saying, what's the name of those web pages again? I can jump back over here for you. We could probably also post them in the chat really quick. So I'll do that. It's TradeWestForex.com/blog for all the past trainings and recordings. Let's see. I've posted that one in the chat, and then to download this tool that I'm showing you guys, it has a lot of other stuff in it as well that we've been teaching about. You can download that at TradeWestForex.com/informer. Now this tool is a free platform. We have a lot of tools built into it and things that make trading easier to have it, kind of put everything in one place. Now it's all free. But we do have some premium features, some add-ons, plugins that kind of go with it, and those are paid. Some of them are for our members that have joined our other programs, and things like mirroring my trades, our money management tool, Risk Hero, those are premium features. But everything else that you're seeing in here, the charting, the quote board, setting up alerts, managing your accounts, auto-scaling out, all this stuff is all free in the trading platform. Market sentiment, all that stuff. So there's the links. Let's jump back if there's any other questions. Let me catch up to those. How do you read tick chart to place the order? Now today I haven't got into an actual strategy for this for you yet. What I've done here is just kind of explained how they work. I'm sure I'll have a follow-up training where I'll actually teach you some strategies. And kind of what I've been planning on doing is teaching a brand new course or a workshop on price action trading, because tick charts are a great tool for price action trading. So I think we're probably going to do that. Hopefully, it'll be maybe in the next couple weeks. But that's when you'll actually know when to pull the trigger and actually execute trades, some actual strategies based on these charts. Okay. What tick chart would you use with a graph for a 15-minute time frame? Okay, well, if the market is active, like you can see right now, we're getting quite a few ticks. If you wanted to see this similar to, say, a 15-minute chart, I think that is about, I'd have to look at this again, but I think you probably see about 100 ticks, maybe more. You might actually be looking at like 300 to 500 ticks to get a chart that looks similar to 15-minute charts. Okay, but it just depends on the pair and the time frame, the time of the day. Do standard indicators work with the same on this type of charts, oscillators, MAs, or do these indicators draw the same way as on standard candlestick charts? Yeah, actually most indicators can work on tick charts as well. And sometimes they actually work better because you're filtering out a lot of the noise. So things will look a lot smoother on a tick-based chart. And soon we will have the ability for you to put moving averages and other popular indicators on these tick-based charts as well, or on our charts in general, I guess. Okay. Can it be compared to the Renko? So yeah, we kind of talked about the Renko a few minutes ago. I showed you the difference. A Renko is based on a certain number of pips movement, where a tick-based chart is purely on just movement, just up or down. Okay, Renko would say I want 10 pips up or 10 pips down before I print a bar, where we just say we want 10 price movements to see a tick chart. So they're both different. One works better in certain cases than the other, and like I say, eventually I'm sure we'll have Renko as a type that you can put in our charts. So every move is a tick, no matter how big or how small, even if the price moves up or down, again, no change. Yeah, it doesn't matter. We're not looking at the actual amount. It could have been a very small amount of liquidity that moved the price. It's just, you just need to see, three, or what I've got on this chart is 3 ticks, so 3 price movements. It's just 1 tick equals 1 price movement. Just 1 price change. Okay, it could improve timing and entry, I think now. So yeah, I mean you can use this a lot of different ways. Like I say, I'll get into more actual strategies for it, but you can see clearly up here, for example, I'll just give you an idea. Clearly up here there was a lot of tick movement, a lot of price movement bouncing around. It finally tried to go up, found resistance, failed, came down really hard, and there you go. You just saw a clear bounce of resistance. Market tested it, lots of activity, failed, market moves down. You could have jumped in here and took a short position for a couple pips. We're on a small tick chart, that's all you're going to probably get. If this was a larger tick-based time frame, you'd see a bigger move. And of course these would take longer to develop. What are the gaps? Okay, when you see a gap here, that's telling us that there was no price even available or offered to the market. Somebody took the liquidity in that area, and so this was the next available price at that moment. Now these are such small movements, it was probably only 1/10 of a pip. Okay, because we're seeing about almost a pip from on the grid here. So it wasn't very much, but that's what it was. It was just saying there was not a price available to trade in here because somebody took that liquidity, and then the next price that was available is right here. So this is the type of things you'll see mostly around news too, when there are a lot bigger gaps. It's that somebody wiped out the liquidity, the next available price was way out, from the last bid, and things moved around. So you might want to go back and review in the blog. I've got a training on what causes the price to move, and that would go really well with this training today. And I'll probably, when I post the replay, I will link to that post in the blog, so you can go back and kind of learn them together. How do you select the pairs to trade? Which news software do you use, or a news link? Well, on our news tab, that's kind of different than this. Has nothing to do with it, but the news is based on Forex Factory. But as far as this chart, this is based on your broker. You just add your broker account. Okay, you go over here to Accounts, Add Account. You can create a demo right here or add an existing account. If you want to see your own broker or live feed, you can log into it. And that's the cool thing about our charting here is it's based on your broker, so you're not just looking at some random feed. So if I want to look at one of my other broker accounts here, I can click it, select the pair, and load a chart based on that. If you trade a daily chart, what do you set a tick chart to for, say, 1,000? I'd say here's what you have to think: how many price movements does it happens in a full day? That's going to vary from day to day, and we could probably do some research and find out. But what I used to do when I had historical tick charts, I could compare. I could actually draw up a 5,000 tick chart and compare it and see if that is looking similar to my daily charts. So that's what you're going to kind of have to do, is kind of test it. But I would say, I haven't ran a tick-based chart for a while, so it seems that it's going to have to be quite a few. I mean, you're talking about price movements. Some brokers have a lot more movements than others, but it might be 5 to 10,000 ticks a day on certain pairs. So you just have to kind of do some testing on that to see and compare to your daily time frame. Okay, any other questions before we wrap it up today? I think this has been a really good training to help you learn about a different way of trading the charts. A lot of times you think all you've got is you're stuck with candlestick charts, time frame based charts, when there's actually quite a few other styles out there. And this is just one. The tick based time periods are just one different way. Soon, like I say, we'll have Renko and Heiken Ashi and some of the other popular ones, but they can give you a different look on the markets. Especially if you're trying to do price action trading, having something that manipulates the price feed or the candlesticks differently can give you a pretty good advantage at, like I say, finding better support and resistance levels, breakout points, seeing the volatility. So I hope you guys enjoyed this one. I think we're going to go ahead and wrap it up. We'll post this on the blog. You can also comment with any questions you might have there. And that'll be it for today. So thanks for coming to the training, and I hope you have a great weekend.